All right, let me know if you guys can see my screen. I'm sharing the screen right now. All right, I see everyone. Yes, all good. Alrighty. All right, where's everybody coming from? Let's see. I'm here in Costa Rica. I'm actually here at my house here. Mark has been visiting me for the past like 20 plus days or so. He's here for a month, so we've been masterminding together, putting a lot of content out for the academy, for the YouTube channel. Me and him have really been getting a lot of great sessions in. All right, looks like we got some people from Florida, Louisiana, Bulgaria, Namibia, Kenya. Good to see you in here, Ben, Jason. Costa Rica. Good to see you in here, bro, from Costa Rica. All right, we will be starting in about 1 minute. North Carolina, Minnesota. Alrighty, Minnesota. That's right next to Wisconsin. I'm actually from Wisconsin, but I don't like it there because it's cold for most of the year, like 8 months, 7 months out of the year. So I like it. I like it where it's warm. Costa Rica is actually considered one of the happiest places in the world. It's a beautiful place. Jungles here are beautiful. It's also one of the most biodiverse places on earth as well. It's absolutely gorgeous. Chapel Hill. All right, good to see everybody in here. Once again, this is a Forexia live session. We're going to go over a little bit of a trade overview on the trade we called in the academy, the trade we sent to the academy on GBP USD. All right, you can see it right here. Also, I want to give a shout out to all the newcomers. We had a few newcomers into the academy since we've lowered the price or offered a discount. Once again, the initial fee has been lowered from $300 to $100, and the monthly fee has been lowered from $175 to $60. So literally we are slashing the prices, giving you guys amazing discounts. If you have not been able to join the academy but you wanted to or had financial difficulties, this is definitely a time that you guys can take advantage of. So just want to welcome all you guys, all the newcomers. It's a pleasure to have you guys with us. We're going to be masterminding it up for the next few months, indefinitely. So let's start with GBP USD. Give me 1 second. All right, so let me know if you guys can see this right here. See this screen? Pretty sure you guys can see it. This was the before trade. This was the exact analysis that was sent to the academy for the students of the academy. GBP USD, Sunday, Monday, Tuesday was forming that, well, and even in the Friday and last week, Friday, Thursday, Wednesday, most of last week, they were creating that, what were they creating? That uptrend, right? That induction trend. It's obvious, that an obvious trend. So what I saw was the wedge pattern, wedge formation. You guys obviously know what that is, the signature trade. The breakout of the wedge. So what's special about this, the breakout of that wedge occurred on Tuesday. And the breakout of the wedge wouldn't have been special at all if it broke out to the downside. But in this case, it broke out to the upside to induce with the already uptrending market and induce at the highs here. So I sent this trade out. I said, you guys wait for an induction to the highs, a stop hunt or a volatile move to the highs of Sunday, Monday, and they wait for a reversal, basically. So this is what happened. This is how it played out. I'm going to give you guys basic overview of the characteristics of this trade, how and why it played out, at least why I believe it played out, the order flow. Mark loves to call it the order flow. I love that name as well. So basically, I guess order flow is kind of the market sentiment of how retail traders are acting at any given moment. But not only retail traders, it's also the market maker or the dealer or the larger banks that are actually moving the market, how they're reacting or how they're acting to how they're reacting to how retail traders are acting at any given moment or circumstance. So we can see here, we have that obvious uptrend. This is super, super obvious. Now, that's one of the rules that when we're trading trends, once it becomes this obvious that it's a trend, right? Be very weary for the reversal. So be very, watch out for the reversal at any given reversal time. So not just at any given time, but after the high has been made, after a signature trade formation, wedge formation breakout with the trend. You know, these are all different confirmations that I'm using to take this trade, you guys. So this trade in particular was a Tuesday reversal off of the highs of Sunday, Monday. So let's look at Sunday, Monday right here. This is Sunday, Monday. Why is this Sunday, Monday? We know it's Sunday, Monday because there's a gap. So taking that gap into consideration, we have Sunday, Monday. This is a 24-hour period. Here is the high of Sunday, Monday. Not only the high of Sunday, Monday, but the previous day, this is the high of the previous week as well. So this is the high of Friday, okay? So this zone in particular is a zone of high liquidity, right? A zone where we're expecting retail traders to be placing their orders, either stop loss or stop orders, limit orders. There's liquidity in this area, right? So a lot of retail traders are placing trend lines as well, right? Now, I actually got in this trade right around here. How and why did I get in right there? because this candle was exactly what I was waiting for. In one last induction to the high, and then a reversal off of these highs, okay? So this candle is a perfect characteristic of a second leg M formation reversal pattern. How is it a perfect characteristic? First of all, a very volatile candle compared to all the previous candles. And it's at a massive zone of liquidity. All right. I previously explained that right here, right in this area, at the highs, there is liquidity. There are retail traders' orders. What's happening? What are retail traders thinking when this candle is smashing through this supposed resistance? What's happening? Can anybody give me an idea? Danish and Emmanuel say buys. Exactly. Retail traders start to buy. Why? Because they've been taught that, yes, Sony, it's a breakout. So they start to buy because, well, it's a breakout of this apparent resistance. And now it's going to turn into support. So they just start buying. They start going long. They think it's going to continue up, like Aaron says. This is the induction move. This is when you get in on the reversal, all right? This is when you start to sell. When everyone else is buying because they've been taught to buy by maybe baby pips or some propaganda on the internet. Their broker is teaching them, right? So for some reason, they're buying. So the mainstream media has taught them to buy in this case. But it's perfect for us because they're giving us liquidity to sell. So we're just going to ride out that sell. With the massive banks, with the liquidity providers, all right? So why did this actually reverse? Now, the past, why did it actually reverse this much? Now, it could have just reversed a little bit, but it reversed over 100 pips. From top to bottom, it reversed over 155 pips. So why? The past week and a half, it was in an uptrend. So it was at least the past 3 or 4 days, it was inducing retail traders to buy, especially after creating that wedge pattern and breakout of the wedge that we all have been taught to buy the breakout, right? Buy the breakout or sell the breakout, depending on the direction of the breakout. So we've been all taught this BS, fed this BS, this propaganda, in order for what? In order to fill Bill Gates's $100 million sell order that he's got right there, right? Because after all, if there's 100 million retail traders buying and he's got his sell order, that's a perfect equilibrium for the market. So the market's always looking for a one-to-one. You can't have a buyer without a seller. That's just how the market works. So this is the basics of how the market works, because the massive big banks or the institutions need us as liquidity to fill their large orders. So they've taught us the wrong way to trade so that they can basically make profit off of it, make money off of us. And, that's not just in the trading industry. That's in every other industry known on this planet. Just about every other industry, big pharma, the news, mainstream media, it's all to exploit us and make money off of us. The food industry, all of it. So if you guys want to believe that support and resistance, the people that are feeding you this BS, if you want to believe it's real, it's true, this is how the market works, via support and resistance, by all means, go ahead. I'm not, I am not here to, I can just guide you to the well. I can't make you drink from that well. So that's the basics of this trade, the basic overview of why I took the trade. So to finish off why I believe it went this far is because the past week or so, they were inducing retail traders to buy. So there's going to be stop losses at this area. Exactly, Sonny. They need to hit these stop losses. And that's why in one candle, one 15-minute candle, they took out 75 pips, 70 plus pips. Boom. A massive move for the stops. All right. So the next topic we're going to go over is my personal trading style. I personally love the signature trade. That's one of the only trades I take. But a lot of times, I'll take trades because they're, for example, a Tuesday reversal. I actually saw this trade as a Tuesday reversal trade before I saw it as a signature trade. So what I mean by that is I was looking at this gap here on Sunday, Monday, because I don't trade Sunday, Monday. I barely even look at the market Sunday, Monday. I just let the market play out. And then Tuesday, I'll hop on the charts, analyze a bit, and I'll look at the market. Just so happens, Tuesday, very nice consolidation here. I didn't even have this wedge pattern drawn out. I saw the consolidation here. I actually saw a little signature trade here. Which I didn't take. That was a little signature trade off the low, but I'm not really going for that. I was looking personally for the New York session reversal off of the high in conjunction with the Tuesday reversal off of Sunday, Monday's high, as well as the high of the previous week, Friday. So a lot of different confirmations here. One thing to take into consideration is that I didn't even see the signature trade until I kind of zoomed out and I actually saw I saw it here. And that was just another confirmation for me that this is going to reverse, right? So a lot of different confirmations, a lot of different things playing out in conjunction with one another to really make my bias true, in my opinion. So that's basically the gist of the signature trade. I take the signature trade as well because it's a perfect complement to an M or W formation, right? A lot of times the breakout of the wedge will be extremely volatile, and that's a perfect characteristic of the second leg of the M or W formation reversal. So a lot of different conformations once again. We have a macro M, and then inside that macro M we have the micro M, just working and inducing off of that red area that we drew out, okay, that liquidity zone. So also they're just accumulating on this trend line here as if it were a buy, right? They're just letting as many people believe that this is going to buy, right? Yep, buy. We're going to let you buy. As if it's actually going to buy and go with the trend after going with the trend for how long, right? So a lot of people say, go with the trend. The trend is your friend. Now, that's just another psyop or propaganda that we've been taught. You know, it's another cliche that, you know, go with the trend. Yeah, the trend is your friend. As if you don't have to take in consideration anything else. Yup, it's falling. It's in a downtrend. It's been in a downtrend the past week, 2 weeks. I'm just going to sell, right? So that's the basis of people's strategies. Like, that's literally the basis of most people's strategies when they start Forex. Yo, it's been in an uptrend the past 6 days, the past 4 or 5 days. I'm going to buy. I'm going to buy the breakout of the resistance, right? That's what they believe. And they buy the resistance or buy the support, whatever. And they get induced, right? It's all a massive mind game. All right. This was a shorter session, you guys. I want to give some time for questions. If anyone has any questions on the academy, we've got like 5 minutes left. We got a question. Is it going to be available later? All of the sessions, all of the Forexia live sessions, which this was a Forexia live session, you guys. I just sent the link, however, public, so that you guys could have like a taste of what we offer in the academy. But yes, this will be available to all of the academy members as a recording. They're all recorded. All Forexia live sessions are recorded. So I may upload it to YouTube as well. So Mustafa asks, what point of your trend lines? I'm not sure I understand that question. The trend lines, you know, they're just to help me see the trend, I guess. How do you find your take profits? There's a lot of videos in the academy that we go over how to find the take profit points, but mostly for me, it's the highs and lows. So right here, I actually had my take profit right here in this zone because it's at the low right here. So once again, this is a liquidity zone just because there's a high, or excuse me, a low right here. There's a low right here, and there's also a low right here. So a massive zone of liquidity that we're expecting right here in this area. And we can see the market just literally went from one zone of liquidity to the next in a matter of hours. And we were able to catch most of that move. Aaron asks, do you do Forexia live sessions every day? Yes, we do Forexia live sessions every single day that the market is open. So Monday, Tuesday, Wednesday, Thursday, and Friday, we do Forexia live sessions. Rodham asks, M's and W's are just double top and double bottom. So why retail traders miss this in your opinion? That's a really, really good question. What I believe is that double tops and double bottoms are so generic. That's so just another cliche to it's kind of propaganda, like as if it's just a double top or a double bottom, as if you're just looking for that. Because double tops and double bottoms happen so often in the market that if you don't understand the characteristics of the double top and the double bottom, which there's so many different characteristics. One of them I was saying is the second leg of the M or W is normally extremely volatile in zones of certain liquidity. So that, what I just said there, if they say that, if they have that in like a paragraph description under the what a double top and a double bottom is, I give them a bunch of credit. But most people or most propaganda sites, mainstream sites, are just saying look for a double top or double bottom, an M or W formation. They don't even tell you what the characteristics are to take the trade. They literally just say, they give you an example and they say one top, two top, and drop. And like there's no substance. They don't teach you, they don't give you anything to rely upon. So it's a bunch of BS in my opinion. Ben says I noticed the signature trade reverse the next day. Does it mean most of the times we shouldn't expect a reversal the same day? That's a really good question as well. A lot of the times, if it does not reverse, but it gives you the entry opportunity, the reversal is imminent. So, and this is vice versa. So, if you're looking at the trade and Tuesday, a lot of times it'll give you an entry opportunity, but it won't reverse. If it doesn't reverse Tuesday, they'll extend the reversal to happen on Wednesday for kind of like that midweek reversal concept. All right, looks like we got most of the questions answered. So talking about going with the trend, if I'm 4 hours, I'm not sure. Emmanuel pointed out something good as well. He's talking about the 4 hour. Now, when I say don't follow the trend, if it's been like I'm talking about intraday trading. So if you're a swing trader that looks at the 4 hour, the daily, the weekly, the monthly time frame, and it's been going on a uptrend or a downtrend, and you just want to buy because of that, I'm not going to say no to that, and I'm not going to say yes to it. But you know, it's just kind of a point of perspective. I do believe in trending markets, but on a shorter time frame, I believe it's also just an induction, just another way for the market maker to get more liquidity out of retail traders. Basically, follow the trend. You know, it's super easy to follow a trend on a 15-minute chart, 15-minute, 1 hour. You know, Jose asks, can you please go over the signature trade, bro? It's right in front of you, bro, right here. This is literally what it is, the concept of it. This is the wedge. We got the breakout of the wedge, which is to induce retail traders to either buy or sell in the opposite direction of the intended move. And it's always at a high or a low. So you can see this was at a liquidity zone, a high. And right afterwards, we have that reversal to hit the stop losses of anybody that was induced to buy. So that's basically what the signature trade is. Very, very brief concept. There's a lot more to it. We reveal a lot more in the academy. We got 1 minute left, so thank you guys for tuning in. Hope you guys all enjoyed this session. Once again, we made it free to Telegram, and we might post it on YouTube. So peace out, and have a great day, everyone. Have a great day, Academy, YouTube, Telegram, everyone. Beautiful. Peace.